All right, well, hello, Maverick traders, and welcome out to your daily market roundup. This is Sonkit here, and here we are, Thursday, September the 18th. Let's get into it. As always, we'll be breaking down today's market price action by taking a look at broad market analysis and take a look at sector and heat map analysis. Take a look at where is the strength and weakness, and then we'll take a look at some opportunities there. So let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So jumping into market analysis, here we are past 24 hours from the FOMC rate decision yesterday. And as you can see, there was a lot of expectation, and there's definitely a lot of volatility that happens around the event. So it's always nice to kind of, break it down and see how things moved 24 hours, beyond that. So here we are looking at the numbers today. As you can see that it was plus across the board. Dow Jones up, we have S&P up, even though we did notice the market paired some of the gains, but they're still sitting at some pretty good gains for the day. Oil is down and gold is down. So if you just take a look at the headlines, well, nothing really has changed in the markets. Markets are holding steady after that Fed rate, the FOMC decision. Economic data today was definitely stronger than expected. The unemployment claims dip. And then we also had this Philly Fed Manufacturing Index number, and that was up the most since January. So, the question is that is the market's numbers likely to pick up over here? We'll see. But one of the things that, everyone's that's been paying close attention to is the rate cut. So we already have a rate cut behind us. Markets are still expecting 2 more rate cuts. Now, I find this surprising because I think if the Fed was pretty clear, they were definitely less dovish as some traders wanted to be. But at the same time, I'm looking at the bond market. I'm taking a look at what the expectations are, and I'm still surprised to see that we're expecting those two rate cuts. Now, if the data changes, I think that expectation will change. But I think that's really where we are. Markets are kind of doing its own thing. We have goals hitting record highs. We have, the bonds are kind of not budging. And, we are just in a very unique situation. And it's still a market that you need to cherry pick. Now, when we take a look at the chart for today, now you can see that even today's candlestick was not the candlestick I want to see. If I was along on this one, we definitely noticed that it run to new all-time highs. But you can see that it's leaving us with a pretty big shadow over there as well. So, I'm still what I would say cautiously bullish. I think this is the good time. We are almost finishing up this quarter, and now everyone's going to start focusing on positioning for the last quarter. Market might just hold on to these levels, and then maybe things will change as we enter October. But I think I'm just very cautiously bullish here. Of course, nothing really is. Everything is sort of giving us a good long signal, but at the same time, considering we're sitting at new all-time highs, we need to be a little bit more cautious here. So same thing happening in the NASDAQs there. You can see they are now again pushing all-time highs, but today's candlestick was not the bullish candle I want to see. But now when we take a look at the numbers today, advanced decline ratio, it was a good solid 70% up, 27% down. And then here we are with a plus minus 50 MA, and you can see that number really hasn't improved as much, 62% to the up, and then we have 38% below the 50 moving average. Now, when we take a look at sector heat map analysis, and you can see that there's definitely, pockets of reds. There's definitely some areas where underperformance is, but I think that's really where you need to be mostly looking at the relative strength and weakness. So now, when we take a look at our outlook, again, nothing really has changed for me. I think based on this little pullback today, maybe this little profit taking come in. But yeah, I think where we are, Not a whole lot of change has happened. Volatility remains to the lower side. So this is where we'll continue using our approach, that is balanced approach. Look at the outperformers, look at the underperformers, and keep your portfolio sort of neutral there. Now, when we take a look at some of the outperformers, here's the first one that I really like here on the setup is AbbVie. Again, this is the one that's outperforming in its sector. As you can see, this thing that had a nice little pullback, and then I think it looks like it's ready to break out. Second one here I have is American Express. As you can see, this thing was in a nice little basing pattern, and it did break out. So this is another one that I'm continuing to look for onto the upside. Here's the ARC, and I was surprised to see that this thing has very nicely broken that resistance here. So this one I think is off to the races here. Considering now we're getting some nice gains in small caps. The question is this a true breakout where we continue to see some new highs? And I think that's something we need to be open to as well. Now, the other one here is Life, and I've been, this has been on my watch list, and I've been having some good continuation patterns in this one. As you can see, it goes sideways for a bit, and then it breaks out. It goes sideways for a bit, it breaks out. So it looks like it's just setting up for another setup here to the upside. Now, let's talk about the underperformers. Here's the first one. That's Boeing. You can see getting a little, bearish signals over here, staying below. We had a higher selling volume. Everything's sort of pointing out to the downside. Again, this is where you get to decide how aggressively you want to play. I like the fact as long as it stays sideways to lower, collect some money on time decay. I think it's really the essence here, because we have the broader markets that's just not are not pulling back as much. So we might see little slow moving down, the slow bleed down, and that's where you need to be mindful of how aggressive you want to be on that strategy. Here's the other one, Comcast Corporation. Now, this looks like a beautiful bear rally formation. It almost got towards that 20 to 50. Here we are, almost back at the lows. This is the one I'm looking forward to sort of also adding in my bearish basket here. Here's the other one. We got Intuitive Surgical. This thing also, we did rally here, some bear rally shorting into. So again, this is not really where the money's coming in. It was weak the entire summer, and now we are seeing a continuation. So that's a good sign for continuation patterns. And here's the last one, ACN, same thing, have a bit of a rally, and here we are back making a low base again. So again, keeping, collecting some more money on the time, let that decay as long as it stays towards the sideways. I think that's really where we want to be. And then we can always add more to the bear side if the market changes, and vice versa. We can add more to the longs as the market changes. So for now, markets, again, cautiously bullish. Focus on relative center weakness. That's exactly how I'm approaching it here. And then I'm paying close attention to any rotation, any sector rotation that comes in the markets as we head into the fourth quarter. Not a whole lot on the earnings front, not a whole lot on the news front. Market likely to cruise over here. Maybe we'll consolidate a little bit. I think that's really what we're expecting in the next 24 hours. And probably we'll see a continuation of that going into next week. So holding steady, keep in mind volatility is low. So make sure you're using the right strategy for these markets. And at the same time, have some ammo on the side just in case if things change, then you want to be able to react and adjust to the market condition. That's all for now. Thanks for joining here. We'll see you the next one. Happy trading.